Hi, I wanted to talk a little bit today about how attorneys and financial advisors could be using a financial mediator who also has business valuation experience to streamline divorce cases. A lot of times we see attorneys and financial advisors kind of involved with their clients that could be going through divorce or even a partnership issue. But more often than not, this it kind of equates to some financial chaos. So you might have a couple that hires two attorneys, two valuation experts, and then they start to get two completely different numbers. Not only that, but now they're doubling the cost of even getting that valuation. So there's probably a better way to approach it, especially when there's other financial complexity in the divorce case, not just business valuations, but it could be tracing of assets or hidden assets, and basically just a lot of mistrust by the parties of what's been happening. So you'll have one spouse that's kind of been outside of the financial situation and one spouse that has been very involved in the financial situation. So a lot of times we're seeing that if they can work together and kind of collaborate in either the valuation or even looking at the entire financial picture, there can be a lot less conflict. So my name is Melissa Gragg, and I'm a financial mediator and a business valuation expert for over 20 years. So I've worked with attorneys, financial advisors, and families to really get some clarity about the numbers, to kind of eliminate some of the mistrust or the emotion by just being very transparent and clear with the analysis. So this typically can get the couple to move towards a settlement, and maybe even prevent them from fighting about the number in court. So let's talk about how you, as either a lawyer or a financial advisor, could use somebody like me if you have your clients are a little bit concerned about the process, and how do you coordinate with us to get the process done quickly and efficiently. A lot of times the best time to bring in a financial mediator, and let's just say a financial analyst, right, is before everything starts to go crazy. So a lot of times at the beginning, a lawyer might want to get some discovery. And this is where we provide a document request list and work with everybody to get not maybe everything possibly that you need and this long list of 20 items, but some of the basics. So maybe 3 to 5 years of tax returns, maybe, 12 months of bank statements and credit card statements, operating agreements, leasehold agreements, um, even like a statement, the internal income statement, the balance sheet, maybe a general ledger, right? But we're trying to pull this information together in a way that it's not overwhelming for the business owner, because at the end of the day, the business owner is going to be a little bit nervous about the number. Like, in their head, they're always going to think that the number is way higher than it probably is. And the standard is typically fair market value. And so that's what we're looking at: a willing buyer, a willing seller. But we need some of that information to take a look at it. Like, we might be asking for a fixed asset listing, but we can work together with the business owner or the accountant to understand what is available and what information do we have to work with. Part of it is just making everybody understand what the process is, so there's some transparency. After we collect some of that data, we're going to encourage the couple, maybe with their lawyers or their financial advisors, to take a look at the bank statements. Do they think that there are some questionable items? For the most part, small businesses are going to run some of their personal expenses through the business, and we call it discretionary items. So if one person is like, hey, they're running $10,000 every year through the business, and I know that it's more personal, like we benefited from it, we can make an adjustment in the numbers, and it doesn't require a full on forensic evaluation, right? So it's going to save a lot of time and effort. Again, in the past, I was a CFE, which is a certified fraud examiner, and a CDFA, which is a certified divorce financial analyst. I also have credentials in business valuation. And quite frankly, you just need somebody who is a financial mediator to kind of cut through the noise, because again, this couple is going to have some assumptions about the numbers. and we can make adjustments. That's very transparent in how we talk about it. So after we get some of that initial information, what we're gearing towards is a preliminary business valuation. So that means we're going to run numbers. We're going to kind of charge less for that because we're not going to put it in a report. And this is a calculation to really give them an idea of what is the number for the value that they're going to put on their marital balance sheet or that property statement. And we really focus on two approaches. So it's going to be the income approach, which is based on the cash flow of the business. A lot of times, this is where everybody questions, well, how are we making such little cash flow at the business? And yet we're living this extravagant lifestyle. So there may have to be some adjustments, and we talk that through. The other approach we're going to look at is the market approach. And so when you look at the market, you're looking at actual transactions that happen out in this particular industry, right? We're going to pull data from databases that we pay for, and they're going to give us comparables. Now, at the end of the day, if you look at both of these approaches, they're going to correlate to like a range of value. And that's what we're trying to get. We're not trying to get the most specific number. We're trying to get a reasonable range that makes sense for the couple. And then we're going to work through what does that mean for alimony or child support? What does it mean for the business value? And how can we be consistent in how we're looking at this and also transparent? So once we gather all that data, we put all the information into our valuation spreadsheets. And then we have a kind of a discovery call or Zoom meeting with the couple. Now, I'm going to be asking questions about the business, but I want both spouses to be listening to the answer. Okay. And they may disagree. This is a perfect opportunity for them to say, well, you're saying that there's not a lot of cash flow, but you always had cash available and we always paid for cash for certain things. So, is there underreported income? Is there over reporting of expenses? We can expose some of those issues and make an adjustment in the valuation, but it doesn't require a whole bunch of other work or other experts to come into play. And again, we're trying to get a reasonable estimate of the value so that we can continue to negotiate all the rest of the other issues. The valuation is just probably one issue in a whole scheme of other problems. And if we can get to that number, that's going to solve a lot of the other issues. But the factor that we have to be mindful of in a business valuation is the owner's salary or the owner dependence. And so we talk through some of those issues in that first meeting. Now, at the end of that first meeting, we're going to go back and take all that information, combine with the income, combine with the market, and come back maybe a week or two later and have another discussion with the couple about the value. Now, this is a meeting that can either be recorded so that everybody can look back at it later and it's still on Zoom. This is a meeting where the financial advisors could join us. This is a meeting where the lawyers could join us. And it's an opportunity for everybody to listen, for us to provide the value to the couple and their advisors, and for people to ask questions. Now, a lot of times what happens is that they maybe don't want to ask questions with everybody in the room. So that's why after that meeting, we offer each side kind of their own 1 hour meeting to pressure test us on the value. Say, well, I think you're a little low, or I think you're a little high. Like, why did you do this? And what if they were doing, more, running more expenses through the business? Or, what if they were siphoning off this income to another company? So, and sometimes there's multiple companies that we're looking at. And so we're trying to correlate all of that information. A lot of times somebody would have an operating business and then a real estate holding business. So we have to look at like what's fair market rent, what is the appraisal of that building, and what is the salary of the owner. So all of these come into play. You also have some issues like the Hansen case that's going to come into play for a professional practice. So all of these things we sort of bring up in the conversation so that we're exposing all of the financial issues and nobody can use the money to manipulate the other person. Now, again, we're not going to put this in a big report. We're going to present it to you orally. We're going to talk through some of the information, and then we're going to allow you to have that second or third meeting really by yourself with your advisor, with your lawyer, to really ask the deeper questions that you have. And at the end of the day, sometimes we might modify our number, but for the most part, we already anticipate some of the issues you're going to have. And we've already provided that in the range of value that we discussed initially. Now, once that is done, what we would typically do is continue on and build the property statement. So the property statement could also be called like the statement of property or the SOP. So maybe you guys have already done something like that from the beginning. We're going to put it into our spreadsheets and update all the numbers. And this is really the marital balance sheet. Now, this could have like business values, real estate, other property, household goods, cars, boats, everything, right? So we want to, as we're doing the valuation process, which could take about 30 days, 45 days, we want them to be getting the other appraisals, right? If there's a home appraisal, if they disagree on any of those, hiring one expert is always going to save time, effort, and money. And if somebody doesn't agree in the long run, they can always hire the second expert. That second expert could just review the report of the first expert and say, I think they got it right, or here's some changes that I would make. Either way, when you start off with one person and we present it to everyone together, it usually eliminates some of the argument and we move right towards that property statement. So this could also include retirement accounts. We could look at the after-tax value of those. We could also look at debt and tax obligations. A couple other issues that typically arise that people are fighting about in high conflict issues is that somebody claims that an asset is separate. So we can take a look at a retirement account or an investment account that somebody came into the marriage with. And we can do also a preliminary analysis to determine what portion is marital and what portion is separate. Another issue might be a pension valuation. Well, depending upon your state, is there a present value calculation of that pension or not? We could provide that as well. The final thing could be stock options or, hidden assets or marital waste. Again, we would encourage both parties to take a look at those bank statements, the credit card statements. Maybe there's a handful, 5 to 10 expenses that are, unknown, right? Let's talk about them. What happened there? Maybe somebody would concede and say, you know what, I spent $50,000 on an outside relationship. And, I would agree that you get half of that in some sort of property distribution. At the end of the day, that property statement is the cornerstone of how we negotiate a full settlement offer. And this is where now having the lawyers involved or the financial advisors involved could be important. We might continue and have separate meetings with each side to talk about child support, to talk about spousal maintenance, to talk about some of those other issues that are very difficult to have conversations around, but that have legal aspects as well. And at the end of the day, what we're going to do is once we've agreed to kind of the financial structure, right? And we've given options, because again, I'm a trained mediator and I'm going to give you some options that maybe you didn't think about. There might be some sort of payout at the end that is a payment plan. We might want to support that with life insurance policies or some other asset that is collateralized. So again, complex situations don't have to be complex. For the most part, people are fighting about the unknown. And the more we amp them up or make them think that the court is going to provide a solution that would be better than what we could do if we worked together is probably incorrect. And so at the end of the day, we're going to come up with a financial strategy that works for the family, that makes sense. And we're going to either hand it back to the lawyers in order for them to write up the agreements. The financial advisor is there to give advice, to advocate on behalf of their client. But we, as the mediator and kind of the neutral third party, not only valuing the business, but also providing some options of how to settle it, we don't want to get involved in what they need for a retirement or how they could invest the money going forward, right? That's going to be some of your role, is to come in and give them guidance or have other meetings outside to explain how they might just have to deal with the financial reality. And sometimes the financial reality isn't a pretty picture. Sometimes it means changing how you spend. changing how you live, and downsizing from this really great, amazing house to two smaller houses that are safe and comfortable for the families. So we're not coming in as a financial mediator and replacing attorneys or advisors. We're actually working together so that we can have something that both parties can walk away with, maybe moderately unhappy, but knowing that it's the right fit and it is reasonable, right? So our goal and our role is to make sure that the numbers are clear, that there's no manipulation of the numbers, that anybody's issue or concern is addressed. And if we need to calculate any of those things, it's a very transparent process. So this is one way for them to look at each option and say, yeah, I think I could live with that, or no, that's not going to work. Maybe there's a couple things that have to go back to court and needs to be figured out. But at the end of the day, if we can work together with the lawyers and the advisors and kind of be the neutral third party, for the most part, everybody's going to eventually face the truth. So, what does that mean for you guys? It means that you're part of the process. It means that you're bringing your clients to us because you know that they're going to have a resolution in the end. Now, it also means that we do those first couple meetings in the first 30 days to get the business valuation. And then the parties might work together for a month or two or three. Typically, it's going to be every other week for 90 minutes. From a financial standpoint, a lot of times people can't handle more than 90 minutes of a conversation about complex financial matters. And at the end of the day, I need to make sure that the outspouse or the person that doesn't operate the business or doesn't have full knowledge of the financial situation understands the financial picture. Again, what I'm hoping is their financial planner is also having other discussions with them and telling them the different types of things they need. The lawyers are having other discussions with them to tell them, what their best case scenario would be in court. But for the most part, mediators are typically former lawyers or former judges or, even mental health professionals, but they don't understand the financial picture. And so we come in and really give some clarity on the financial picture. So at the end of the day, here's a couple questions that we have that I'll answer kind of quickly as a summary of what we've already talked about. So, what is a financial mediator and how are they different from a divorce mediator? So, the financial mediator is really going to specialize in the numbers. So, we're going to talk about the business valuation. We might talk about income analysis that leads into, and even provide an income analysis that leads into the alimony and support or child support payments. We're going to look at the retirement assets and see if they need to be divided or quadroed, and or if one person can keep theirs and the other person can keep theirs. Again, we're going to look at basis and anything that's necessary. We might also need to look at distributions and income to the parties. So while a traditional divorce mediator is just going to focus on some of the emotional issues or the parenting issues, we're hoping that the lawyer and the advisor can kind of take the role in some of those issues. The financial mediator is really going to be kind of a neutral expert that is breaking through the complex financial situations and doing it in a way that we're advocating for the business value. We're advocating for the clarity of the financials. We're not advocating for one spouse over the other. So why would you start with a preliminary business valuation instead of a full report? Well, this is just going to be where we crunch the numbers, but we don't actually charge you for putting it in writing. And we do offer to record it in the Zoom so that people can look back on it and understand what we talked about. But at the end of the day, the cost of a full report is probably going to be double or triple what we charge to do the preliminary business valuation. And you just need that number to guide the settlement discussions. At the end of the day, people can't even move forward on discussing everything about the financial situation if they don't have a number for the business. Now, if the case proceeds to litigation and everything breaks apart, because we know high conflict and we know high dollar, not everything is going to run as smoothly as we think. We can typically follow the valuation to court and provide expert testimony for that valuation for whatever party determines that they want to move forward. And so this is going to save you money on everybody have to hiring new experts. And again, we're there to champion the reality of the business. And we're there kind of as a neutral third party to look at it objectively of what would the market bear? What is the fair market value? And what would a willing buyer or seller transact this business for? That's why if we look at the income approach compared to the market approach, you're typically going to correlate to a value or a range of value that is reasonable. So how does working with a financial mediator benefit attorneys and advisors? For attorneys, it reduces a lot of the back and forth about discovery. Usually everybody's more willing to provide documents if they know that they have somebody in the middle that's not advocating for one side or the other. They also, for the most part, we know that attorneys and judges don't understand these complex financial matters. So it allows you to take on clients that have complex matters, and you're really putting those complex matters back into our lap. And this is where we need to be very transparent and clear in our communication and make everybody knowledgeable about how business valuations are done. So that's usually relying upon third-party data, industry reports, transaction data, and things like that, so that it's not really our opinion that we're providing. We're relying upon research and outside third-party data that supports this position, and we're listening to both sides talk about their issues in the business. So this is actually going to save a lot of time and maybe even preserve the relationship so that everybody can kind of work together. The lawyers can advocate and the financial professional can remain neutral. So, can one neutral expert really serve both parties fairly? Absolutely. I mean, a neutral valuation expert works for the business, not for the individuals. And we're looking at the data, we're looking at the financial data and trying to figure out what story does it tell us? Not what story each person says, but what are the financials telling us? Where are we concerned? Where is there maybe some discretionary items, and how can we just easily add them back? If I can show you that adding back that $20,000 of discretionary items is going to affect the value by this amount, it allows you guys to negotiate around the other issues. It allows you guys to focus on the kids and the parenting plan and how you're going to co-parent going forward. And quite frankly, it doesn't kind of destroy these families and leave them mad at the end. Absolutely, at the end of the day, if they're slightly unhappy with the process, then it's probably a reasonable value and it was probably a reasonable discussion. So it also gives everybody the opportunity to ask questions. Sometimes the clients don't know the right questions to ask. Then we'll allow the financial advisor to ask questions or the attorney to ask questions. I'm an expert witness. I'm used to being grilled on the stand and in deposition, so I can handle it. And I'm there to, again, champion the value, not necessarily one person's perspective over the other. Okay, so finally, how does a financial mediator support the final settlement process? So once we develop the business value or the pension value or, the stock options or any of these other ancillary items, even maybe what portion of something is separate or marital, then we're going to put it together in the property statement. And we're going to now have a discussion about who's going to keep what. Again, everybody can be involved in this discussion, but we're going to use some central spreadsheets. And sometimes we even share the spreadsheets with everyone so that they can work again outside of this mediation space and get some things accomplished on their own or with their attorneys. Even emails can work to facilitate some of this. But we're also looking at that asset division and understanding if there needs to be a buyout, structuring the buyout or property trades. And then we're looking at a spreadsheet that's going to summarize everything very clearly for the lawyers to draw up the final agreements. That's where we hand it off, and we're not going to put together an MOU or any sort of agreement. We're going to allow the attorneys to draft those agreements or put together the parenting plan. we do have experts that can talk about the house and whether it can be refinanced or if it needs to be sold, like whether one party could qualify for assuming the loan and things like that. We also have a parenting coordinator that can work together with the parties to create a parenting plan. But at the end of the day, we know that lawyers and advisors also have that capability. And so we try to navigate and mediate the harder financial issues and leave the attorneys to do some of the other work as well. So, in conclusion, a financial mediator is one of the most cost effective ways we've seen to not only reduce conflict, to save money, but also to help clients reach informed settlements. And so they have that business valuation. If they want to go hire a second pair of eyes, they go hire somebody to just take a look. Maybe they can watch the video and say, you know what, this makes perfect sense. Maybe for a small fee, and if everyone agrees, we would put those calculations in writing in some summary schedules so that people can talk about it, think about it, consult with their other advisors. And even we set up an additional meeting where maybe there's more questions. Maybe there's some concerns about whether we got the value right or wrong. We would always encourage that discussion. But at the end of the day, we try to have a process where they're voicing all their concerns before we provide the value. So for attorneys, it means a lot less contested hearings. For advisors, it means cleaner post-divorce planning. And for clients, it means peace of mind and financial clarity. So if you want to partner with us for your next case, you can learn more about what we do at valuationmediation.com, or you can connect with me on LinkedIn. We do 30-minute consults with the parties or attorneys or advisors. We also meet in person if that is something. The couple can also do a consult together. Maybe they get along, but they're just a little mistrustful of the process. So let us talk about it. Let us bring the strategy and transparency back into the divorce process, one valuation at a time.